Hello, I'm Leo Wang, and today we're analyzing a wave of uncertainty that has sent shockwaves through the financial markets. A climate of risk aversion is taking hold, driven by a potent combination of political actions and unsettling economic signals. The primary catalyst for this downturn is a series of high-impact events stemming from the executive branch. First, an executive order was issued calling for higher tariffs on dozens of countries, immediately reviving concerns about the negative effects of import levies on the U.S. economy and sparking fears of a renewed trade war. This move is expected to negatively impact companies that rely heavily on international trade and global supply chains. Compounding this anxiety are serious questions about the integrity of U.S. economic data. The market was already digesting sharp downward revisions to recent jobs data, suggesting the labor market is weaker than previously understood. This was followed by the sudden dismissal of the head of the Bureau of Labor Statistics and the early resignation of a Federal Reserve governor. These developments have stoked significant investor fears, creating uncertainty about the reliability of the very data the Fed uses to gauge the economy's health and make critical interest rate decisions. The broad market indices, bonds, and the dollar have all felt the pressure from this erosion of confidence. This macroeconomic turmoil is mirrored in the corporate world, with earnings season revealing a landscape of clear winners and losers. Amazon stock, for instance, plunged around 8% despite posting better than expected overall results. The reason for the drop lies in its cloud computing division, Amazon Web Services. Its revenue growth, while meeting expectations, failed to accelerate, disappointing investors, especially when compared to the strong performance of its competitors. In stark contrast, social media platform Reddit saw its shares soar more than 20%. The company delivered a surprise profit and blew past revenue forecasts, driven by a significant increase in its user base. This demonstrates a clear divergence in investor sentiment within the tech sector. Meanwhile, Berkshire Hathaway reported a decrease in its net underwriting earnings for the second quarter, falling to $2 billion from $2.3 billion a year earlier. This dip was attributed to catastrophe events and increased loss estimates, highlighting the challenges facing the insurance and reinsurance sectors. Overall, the market sentiment is decidedly bearish. The key risks investors are now watching are the potential for further deterioration in the labor market, an escalation of trade tensions, and most critically, the ongoing loss of confidence in the reliability of U.S. economic data. All eyes will be on upcoming data releases and how these overlapping crises unfold.